a round of introduction as we start. I am one of the co-hosts, but primarily would get involved while I'm introducing the guest and the facilitator for the event. My introduction, I am one of the co-founders here at Signalz, and we keep conducting these sessions just to make sure that all the people who are starting their journey on as a trader or an investors, they remain well informed, and thereby when we do these sessions, we make sure that we have members who are SEBI-registered, who are available for answering any questions or any doubts that people have as they start their journey. So we'll wait for maybe 1 or 2 more minutes and then we get started. If you really feel Jeet is the right guy for you, who can guide you in this journey, feel free to take his subscriptions. This session, as it says, Ask Me Anything, is going to be an open-ended one. The way we'll go about is my co-host Prabal would moderate these sessions. So make sure that you keep answering your questions, putting it on the chat. If you feel comfortable coming on the audio, we would love to hear your voice as well as you ask that question. So you can type in on the chat window for any question that you want to put forward as in an audio format. We will enable your audio and then you can ask your question. If you feel that, asking it in a textual format is what gives you more comfort, feel free to drop your question. And Prabal will take it forward and then ask Jeet for that same. All set, Jeet, on your side? If that's there, give us a go ahead and then we'll open it for forum to ask those questions to you.
Yeah, all set, Siddhartha, and thank you very much for the introduction to the panel. We can go ahead.
Okay, great. So before anyone hops in, right, I have a question from my side as well onto this. Primarily with all this turmoil that's happening with US president trying to put these tariffs, right? What's your feel? This volatility is more like a sentiment driven, or is it really going to have some backing with the actual economic data, with talks happening that there's a Fed chair person having stiff conversation with Mr. President, and is this really something which will take things towards the economy going into recession on US side? And then what do you feel could be the impact if at all something like that happens? So that's more of an icebreaker question from my side. Will help me also as a trader and investors. And I think by the time others can ask their questions.
Okay. Yeah. So if I talk about all the geopolitical decisions which are taken from the US and China in the coming days, in the previous days, so the scenario and the market driven is all about the sentiments. Okay, it was nothing to be feared as a country because India is more like a consumer state rather than a producing state or producing country. We can see that China is mostly affected by the tariffs which have been put off by Donald Trump. And if I talk about the Fed chairman and Donald Trump, there is a lot of contradiction between them as well. Because what Fed is thinking that they have to control the inflation in the US, because from the past 1 or 2 years there was a huge problem of inflation, and US has already breached the debt ceiling because country was in the huge debt as well, and due to which there was a lot of increase in interest rate. And if we see about the data for the last 3 to 4 months, the Fed chairman is trying to cut off those rates because he saw a major stability in the inflation part as well. But the major bomb which has been given by US President Donald Trump after the election is the tariff part, and it will again heading them towards the recession part. And according to me, there will be a huge problem for US as well, because any country cannot manufacture each and everything from itself. They need resources, they need businesses, and if they are planning to make each and everything, but they don't have much resources and the manpower as well, that's the huge disadvantage for them as well. And it has majorly affected China because China is the world's #1 manufacturing country, as we all know. China manufactures around 27 to 28% of all the goods in the country. So they are majorly impacted, and there is a huge war between them, and markets are just affected by this. And for the long-term and short-term sentiments, our India is a developing nation, and I think we should invest in India. That's the whole perspective of this session, so that each and everyone who are attending this session, they will get to know about their own stocks as well. And any other question from other attendees, they will also get an idea about the stocks which they have also invested in. So there is so from this session they will be benefited huge, because they will be getting the analysis of more than, I think, 15 to 20 stocks. I think that's great for them as well. And I'm very happy to share about each and everything from my side as well. So let's move forward further if all the questions
Yeah.
have been taken.
So I think a follow-up question came while you were talking on this. So there's definitely this effect that we are seeing, that the export-heavy Indian companies would see some heat as part of this, right? But then is the equation between US and China going to give these companies an added advantage while they're impacted, but then against the competition, will they get an added advantage?
Actually, China has started another thing, because most of the all the branded materials have been manufactured by the China, and many of the companies do the form of white labeling. If you know, they purchase the materials in bulk, they put their brand, and they sell it in the open markets. But what China is doing is that they have already announced that each and every branded product like Gucci, Armani, any of the products or the available type of all the manufacturing part, they are selling it from itself, and they are selling it around with 90% discount. For example, if you are getting a Gucci bag, okay, around for 50,000, China is ready to sell it without the brand around 5,000. So they are doing this kind of stuffs, and they are definitely with the trade in the trade war with the US as well. Talking about the India will not be majorly impacted in this. Okay, though tariffs have been increased, but if we look towards the data, India still exports all the goods to the smaller countries, which are not much developed as India or any other countries. They don't export it much to the US, only some part of the goods. So majorly it will not be affected to Indian company, because there are a lot of customers and consumers outside as well. And first of all, India is not much in the manufacturing phase; it is much more in the consuming phase. If we look towards the data, so there will not be any problem for India in the long term basis.
Right. So, Jeet, I think on this point itself, given that the tariffs have not been ruled out, they've just been postponed, right?
Yes.
So the question that one of the audience is asking is there another fall expected from here? If not right away, but maybe like few months down the line when those tariffs story is back into action, and then how should we really sail through with this, something that people foresee that could happen maybe within a quarter's time itself?
So according to Donald Trump, which he's saying in the public media that he want to make America great again, but according to me, it's my view particularly. It's not a particular view of the audiences. What I am saying is that he is not thinking much of the US stock market, because we only know that Donald Trump is much more focused on cryptocurrency part, okay, as we know. So his and one more thing, if you have noticed, when there was a previous session of Donald Trump, the president session, he was also boosting the cryptocurrency. All the cryptocurrencies were boosted at that time. Elon Musk was keep on posting in the Twitter, and secondly, when the Joe Biden came, all the cryptocurrency became a bloodbath market, as we know. Okay, most of the retail traders have been trapped in that cryptocurrency market. But one more thing, if you have noticed over here, when Donald Trump came again this year as a US president, we have seen a major upside in the cryptocurrency. Bitcoin has been boosted towards the all-time high as well. And again, in the when we switch on the TV, all the cryptocurrency platform ads were gone before when Joe Biden has came. But again, many of the companies are promoting cryptocurrency in India as well. So I think Donald Trump is he doesn't care about the bullishness of the US market, and there is a domino effect, what we call that. If anything happened to US market, all the global markets are drained down, because dollar is the most powerful currency in the world. I'm not talking about the value, the price value. I'm talking about the trade value of the dollars. So that's the main problem. If I talk about the investing in the Indian market, this is the right time to invest for the short term. You can go for the long term for small quantity, but you have to build some strategy for investing. The first strategy is that if I talk in short, whenever we invest in the market, or the current psychology of the Indian audience is that when the market is bullish, they put their money. But when market comes in the bearish phase, they never put their money there. That's the major issue. Okay, if I take an example, if you go to buy anything in the market, any of the clothes or any of the stuff, it's a simple question from everyone. Please put that in the chat box. You want to purchase a particular stuff in discount or in the premium value? What's your thought in this, majorly? Because I will be looking for the discount for the shopping. That's my perspective, and I think many of us here are looking for the discount as well. But same thing happens in the Indian market, that people are not willing to put their money or shop for the good stocks in the discounted market. They are willing to put their money when Sensex was 80,000, but they are not willing to put their money when Sensex has been revalued downside, around 77 to or 76,000 or less than that as well. So you have to change this perspective first. Always try to put your money in these type of market, because this is the right opportunity to grab most of the stocks for the long term, which you are getting it on discount. Whenever market hits the bullish phase again, because this all things are temporary. This bearish phase are also temporary. We have seen 70% retracement from the all-time high of Nifty in the last 6 months. But if we talk about the March session, it took only 1 month to recover 9%. So market was falling from the last 6 months and it fell around 17%. But it just recovered 9% in a single month. And from the last low of 21,700 levels, again 2,000 points have been boosted within the last 8 to 9 days as well. So when market gets bullish, it gets bullish faster than getting bearish. That's the only thing. You have to look towards the stock in the short term as well as of now, boost small profits, and just keep some stocks in the radar for the long term. When you will get it in the premium, just buy it and be calm for the next 4 to 5 years. That's the only thing.
Right. So I mean, the takeaway is there are still a lot of steam left for people to start getting into to get back into the market, right? So while there are few questions, Prabal, you take it, but what points I take away from the last mention from Jeet is if there are any specific questions that people have around particular stocks that they track, feel free to even put questions around those, and I think Jeet can take it forward for us as well, answering around what is his say on those specific stocks. Prabal, you want to take the next set of questions?
So the next question is coming up. Do you think, Jeet, whether market condition is now safe for FNO trading?
Okay, if I talk about the FNO trading, first of all, if you are a full-time trader, then you can go for FNO. If you are doing something else for your for active source of income, you should not go for FNO. Okay, because whether the market is good or not, you will not be able to track the market whole day. Okay, one single error on your views and it will drain down your capital. Okay, the second strategy, if you are doing the FNO, okay, if you are doing the FNO, first thing you have to see that markets are volatile. If you are a buyer, if you are an option buyer, you have to look towards that markets are volatile, because in volatility you will be getting the opportunity to boost your returns in the FNO. Okay, because most of the times market are stable. If I talk about the February session, if anyone has noticed, the whole February market was on a consolidation phase, in the sideways. Okay, most of the FNO buyers have made huge losses on February this year only, because there was no volatility only. All the sellers were active and they were selling on both premiums, either C or P. So you have to understand the market view first, that whether it has the volatility, and volatility comes from number of buyers and traders present in the market. So what you can do is, I will be sharing a short strategy in some time for the FNO. So you can wait for this, which data you have to look and how you have which touch points, which it will help you looking towards the chart and FNO. So you will get your proper answer there.
Got it, Jeet. So just adding one more question here, from my side, it's a question: what common mistakes do you see retail investors are doing, and how we can avoid them?
If I talk about the retailers part, there are two segments. Most of the people wants to do trading. Most of the people wants to boost their returns to investment. Okay. Without proper resources, you will not be able to boost your return in the trading part. Okay, I am just sharing some of the things which most of the retail traders don't know. The first of all thing is that actually, for my personal experience, my own friend, my best friend, me and him have entered the market in 2020 after the COVID crash, and We were in the market, we were experiencing we were also a new buy in the market by many of the people. And we have also suffered huge losses in the FNO before when we have started. It's the truth, because I am here to be honest with you all. Okay. And that's the experience which I gained. Now my friend is working on a good trading firm. So he is sharing his experience from his side also. And most of the people are option sellers there. The first thing is that they have a particular resource that is known as Bloomberg, if anyone knows that. The terminal of Bloomberg, where you will be getting the news and data 30 to 40 seconds before it comes in a public face, like Money Control, Live Mint, everyone else. And it's a premium resource. I think the cost of that resource is around 32 lakhs a year. Okay, Bloomberg takes 32 lakhs a year to set up one terminal for a particular trader. First of all, many of the people who are getting data early, they are already ahead in the market from each and everyone. He's ahead. They are ahead from you. They are ahead from me as well. So most of the people don't have premium resources. Okay. Avoiding the premium resources, you can still make money as well. Not as much money as them, but some of the resources which we have available. Okay. Most of the people don't use TradingView Premium. Okay, because it costs, I think, 4,500 per month. 4,500 per month, the pro plan. We use the free version. TradingView gives the data in a delayed path. So we miss around 10 second or 20-second delay data. That's the second disadvantage. Third disadvantage, we are driven with the psychology and the emotions. Okay. We are not confident in our own trades, because most of the traders are not trading, they are gambling in options. And it's correct. Last year, SEBI has also published a data that 95% of traders make losses. And if you open your Demat account, you will get a disclaimer as well. It has been a mandatory part for each and everyone. So according to me, if you are a trader, you can be a trader, you should approach a good expert, or you should give some time looking towards the market, experiencing the market, or burn money. Because without burning, you cannot be an independent trader. Okay, and if you want to be the dependent trader, many of the experts are available in the market, the registered experts. I'm not only talking about me, there are more of them. You can approach them with a short subscription and you can take their guidance. Okay, because at some point of time, especially when there is a concern about money and capital, you should take an expert guidance if you are facing some problem. That's it.
Okay, all right. So let's come up with the next question. So someone is asking about GITF Infra. Like he has purchased a big lot, around 500 shares at an average of 543, and it is currently 393.65, and PFC 200 shares at 520. So which is now down to 433. I've like he reached these prices after averaging, so which means the entry was wrong. Should he have to wait out for the drop, or like how he can come up with it?
Okay. Oh, so I have to ask one thing. Is my screen visible? Because I've opened TradingView for this. Okay. Can you please repeat the name of the stock?
JITF Infra. JITF.
It's JIT. Okay.
JI. Yeah.
Okay. So at what price you have buy? Can you please repeat at what price they have entered?
It's around 543. Where he purchased, and after that it got dropped to 433.
Okay, I think around this price you can see. So one mistake I would like to just mention, a small mistake which we have done is, if you look towards this part, this is a downward trend. Okay, this is a downward trend. This is the place where you don't have to buy a particular stock. You have to wait for an uptrend. Okay, you have to wait a stock to come a bit up from this part of time. If you have bought here, at least you should have bought it here. So this is the mistake which you should avoid. Another thing, the market is being in the downtrend for many of the days, and currently it is consolidating in a particular range. One more thing, if this stock breaks this level around 332, then there are more chances it can fall down around 250 levels as well, because this is a major support. You can see in the screen, this is a major support. This is a major support. This is a major support. It took support 3 times in this particular range. And after taking the support, it has again started to rise up. So what you can see is, if you are holding a particular stock, you should exit this stock when it gets below 330 levels. You can exit, you can wait till 330 levels. Okay, you can hold this stock up to 330 levels. But if this stock comes more down around 330 levels, you can sell it. Okay, Prabal.
So averaging is like averaging this
Okay, if I talk
till
about
now
the
is
averaging,
good, right? We don't have to exit for that.
yes. What you can do is let me just open screener for looking towards the small fundamental. Just a minute. I will just looking towards this fundamental and we will be getting. Okay, the quarterly sales have started increasing. Okay, it got a drop in June and September quarters, and it has started increasing. It has started growing again. And if I talk about the net profits, there is a huge problem in net profits because net profits are not stable. So there is a red flag here in the net profit. Okay. So what you can do at this point of time, rather than averaging, you should wait for the result of this particular stock. For this particular stock, you have to wait for the result, and in the next quarter, you can look towards that. You have to average it or not. Okay. One more thing, what you can do, you can go to screener if you want to pick the stock at radar for the next result for the March quarters. If the profit grows from if there is an increase in profit as compared to the last quarter, if there is more improvement around because in September quarter the net profit was 113 crores and it fell down to 4 crores. Okay, so there was a huge downward in the net profit. So I think if the net post net profit above 30 to 40 crores, you can average it for the future. Okay, but you have to look to wait for the quarterly results, and you will get the quarterly results within 1 month because the result season has just started. All the companies have started posting their results. Prabal, we can move forward towards the next question. The next question.
Yeah, so we can forward with the next question. So we are talking on to the charts only. So I have a question, one more question, that holding 6,000 NMDC at the rate 87. Can you open live chart and let me know hold, sell or average?
So this stock is in the consolidation phase and it has taken a good trend from 60 levels. I started growing. If I talk about the fundamentals, let me look towards the fundamental for NMDC. It will give me a more view because currently we are in the quarterly season. We can look towards this. We can get a perfect view. Okay, sales is increasing. Sales is increasing. NMDC is good to hold. It's not a concern. And it is also a good stock to hold for the future. So you can wait for your own levels as well. Okay, if you want to average it, you can go for it. It is a good price to average as well because it will boost again in the future. And it hasn't fell much as compared to other stocks. So you can wait for averaging. And if I talk about the charts, this is the next resistance level, which is I think in the verge of breaking off. And I'm also expecting good result on NMDC because I've looked towards the fundamentals. Fundamentals are quite good and improved in the last quarter as well. Okay, so you can go for it for the averaging. You don't have to worry about the stock much. It's a government subsidiary holding company as well.
I hope so. Mega got her answer well. Let's come around with the next question.
Okay, what's the next question, Prabal?
So GDP growth doesn't look good. The revised FY 2024 to 2025 are 5.9% inflation are coming around to 4% target range. MPC has put a hawkish stance on the repo rates, further rate cuts expected. Do you think bond market should be a good bet since the rate cuts are evident?
I think bond market, most of the people are focusing on the stock, and I like that someone has raised this concern about the bond markets as well. Okay, so I'm just telling a very small thing. You should be diversified in each and every financial asset because we have seen a major downside in the stock market as of now. Okay, so you should be also focusing on the bond market and you should be focusing on the corporate bonds rather than government bonds because government bonds give you returns as the fixed deposit only. I think less than fixed deposit, around 5.5% to 6%. What you can do is you can go for the corporate bonds. Okay, you can, if for example, if you are earning, I'm just taking a raw example. If you're earning 1 lakh a month, okay, and removing all the expenses, your personal expenses, household expenses, you have currently around 50,000. You have 50,000 to invest in the markets or any other financial asset. What you can do is you can keep aside 20% of your money, not 20%, 20,000 rupees from that 50,000 and invest in the particular bond. Because bonds give you fixed rate of interest per annum. Okay. Secondly, it gives you around 16 to 70%. Most of the corporate bonds also give 16 to 70% per year. Okay. Minimum you will get around 10 to 11%. Okay. You can beat the inflation through the bonds and it will be a safe bet you as well. If your risk appetite is low, you don't want to take much risk, you want to play safe, then bond is a very good option for you. Okay. You can buy the bonds, some of the bonds, and rest of the money you can put in the equity markets. It will not be a concern. So you can invest in bond. One thing what you can see is any of the corporate bonds you are buying, you can see a small fundamental metric there. Okay. For example, if you are buying a bond for Adani, because Adani is aggressively selling bonds as of now and raising money through bonds. If you are buying Adani bonds, what you can see is you can look towards the balance sheet. And one thing you can notice there, their debt to asset ratio, how much debt they are taking it and how much asset they have. For example, they have a total debt of 1 lakh crore and their assets are only 20,000 crore. It means that if a company could not pay their money to their bond investors, if there is a default risk presented, then there is no option for the assets as well because they have a total debt of 1 lakh crore. And besides, you can see that they only have the fixed assets of 20,000 crores. So in the case of default, you won't be able to get your money. Okay, that's the major issue. And if they have asset more than 1 lakh crore, it means that they have something in their assets so that anytime if the company's business goes down, they can sell their assets and give that money to their bond investors. Okay, so you can watch this metric. Just have to watch total debts in the balance sheet and the total number of assets. Their total value of their assets, fixed assets, land, building, machinery, everything. That's it.
So next question from Nishant. That Amaraja Energy and Mobility has good fundamentals, but the stock has been underperforming. What are your views on the stock? Is it at good price to enter or hold?
Okay. Amaraja Batteries is a manufacturing of, he does manufacturing for Tata. Okay. If you look towards the portfolio and it provides battery solutions to them. Okay. So according to me, the trend is for the EV for the next 10 years. Okay. EV will become a new big value chain in the automobile sector. And currently, if Amaraja is getting, if you are getting Amaraja Energy in a very good discount, you can go for it in the long term. And if I talk about the correction, it has corrected a huge from the high of 1775 to 1000 levels. So you can go for it in the long term. What you have to do is don't put all the money at one time in a particular stock. You can wait for some growth. Okay, if you have to start, you can start now, put 20%. If it grows more, if the stock grows more, around 1100 or 1200, put more 20% and strategically divest all your money till 1500 levels. It will be a good strategy. Okay. And this strategy works a lot when a particular stock doesn't perform and it goes down. It tells you that you have only lost 20% of your wealth, not rather than 100%. So this is the strategy you can follow. And fundamentally, this stock is good. You can go for it.
Okay, so how do you identify potential multi-baggers in long term? Like, what is it that look into want to know about your ideology actually?
Simple thing is that we can use both technicals and fundamentals. Okay, so the simple strategy is that there are 45 plus industries in India. Okay, and around 200 to 200 plus sectors, the small sectors which are divided in under these industries. So we, as an investor, are very much confused that which industry and which sectors to focus on. That's the huge problem. So what you can do is, I'm telling you one source. If you can note it down, it is ibef.org. If you can note it down, it is ibef.org. Can I type in the chat box? It will be visible to them.
That will be great for like.
Okay, ibef.org. Okay, this is the website. where most of the analysts, most of the investors go and watch all the fundamentals. All the datas are available in this particular platform. Okay, all the fundamentals data. There are PDFs for each and every industry and sector. What you have to do is you have to look towards those sectors where growth potential is much more, because IBF.org is a very big research organization as well. They do all the primary research and put that research in this particular website, and it is free of cost for each and everyone. Okay, you don't have to type in the Google in a particular industry and you have to search it. You will get each and everything here. What you can do, you can log in here, you can watch around the sectors, you can look towards its growth, and they have also listed some of the stocks on that particular sector. Okay, after analyzing 5 to 6 industries, because as an investor you should only focusing on 5 to 6 industries for the long term, because you cannot invest in all the industries at a time. So you can identify 5 to 6 industries. First of all, which industry is very demanding for the future? Secondly, the industry which have too much growth potentials. Okay, the CAGR. If I talk about the CAGR rate is higher as compared to other industries. I've written in that chat box. Third one, you can look towards those industries as well where India is in a good ranking. Okay, because in power sector where India ranks, rest if as compared to other countries, in cement sector where India ranks. Okay, where India is ranking high, it means that there are high chances India will export those of the things to other countries. Okay, it will be a plus point. After analyzing such sectors, 5 to 6 sectors, now you have to focus on the best value chain in that particular industry. What you can do is, for example, in the automobile sector, there are 5 to 6 value chains. Okay, what are the name of that value chains? Automobile sector has two-wheeler. Automobile sector has four-wheeler sector. Automobile industry has automobile ancillaries, automobile dealers. These are the different value chains. Two-wheeler stocks are different. Four-wheeler stocks are different. Passenger vehicle stocks are different. Ancillaries are different. What you can do is you have to identify the best industry which can boost the return in the future. For example, you can look towards, if I talk about the automobile, you can look toward the next value chain is EV. So you can focus on those stocks which are participating in EV. Okay. So this is a simple methodology which you can follow for long-term investment. Rest, each and everything will be updated by us. Okay.
All right, Jeet. So let's head up with the next question. So how do we assess the fundamentals of the companies? Recent news about Gensul engine is really disappointing. How do we identify such trends?
Okay. The major problem with Gensul was that the promoters of the company were using company's money and enjoying with that money. If you have read the news, okay, what the promoters were doing, they were using investors' fund. They were partying all the side. They were going to massage centers. They were going to casinos. They were just using all those money. So most of the problem here happens is that good management. What you can do is you can download a company's annual report. You can look towards the management profile, that who is managing the company. Because if you remember, Rakesh Jhunjhunwala sir has also told in the past about one of the things that he used to communicate with the promoters of that company in which he was investing in, so that he would also get to know about the promoters or the managers who are running a particular business. So here we cannot directly contact the promoter. Okay, what you can do is you can look towards their profile. Okay, because each and every thing is given about a particular promoter in their website. Its educational background, how much money he takes from the particular company as a salary. Each and every data is being given in the annual reports. So you have to do a fine reading, looking towards the management, and you will be getting, you will get to know about the management profile and about the personalities who are managing that particular company. So you will get a confidence on them, and then you can go ahead with the investing. For example, if I talk about Zomato, okay, everyone remembered that Sir Rakesh Jhunjhunwala was once told that Zomato is a company where he will never be investing in. And many of the people have also drew a negative feedback for Zomato as well, because Zomato was a loss-making company at that time, and it was a huge downside, and fundamentals were not quite good also. But if you remember the founder of Zomato, okay, Dipender Goyal, he is one of the finest personality. What he has done that he has brainstormed whole his idea whole is business change in such a way that now Zomato has converted its net losses into net profit. And we have seen that Zomato was around at rupees 50. The stock of Zomato was around 40 to 50 rupees. And now you can look towards the price of Zomato. That's the main thing, that if a management is good, okay, if the management is good, if the managers who are running the business are good, they are dedicated to the business, there will be no such problem in the particular fundamentals as well. That's the only thing. So you can analyze them by looking towards the annual reports. And second major source is the conference call. If you remember the conference call transcript are available easily. Okay, you can read those transcripts and you can get to know about all the question answers that has been done by the investors within the investors, and that's the second. Okay, any other questions, Prabhu?
Right. Yeah. So talking about PFC, one user has like someone if buy it on 520 price, and now the price is 433. So what should he do?
At what price he has buy?
520, and now the price is around 433.
It gave a good reversal from 360 levels. Okay, it has started its upward side rally. If the Nifty is good, okay, you can also see a super breakout here, 200 EMA breakout. So it is already moving towards the average, exponential market average. So currently it seems bullish, and it also took a reversal from the support as well. Now I would be looking towards the fundamental. Just give me a minute about the PFC. Let me see if their sales and net profit are okay. I've looked towards these fundamentals. Net profit has been growing. Yes. Okay. This stock fell because of the reason, because between March, June, and September, in between 2-3 quarters, the net profit has given a negative growth. Okay, that's the reason the stock was falling, and because of the market weakness as well. So all these two red flags have been covered. Okay, market has again strengthened for the new bullish phase, and secondly, the revenue has also started growing in the positive way, as well as the net profit. Okay, so there is no issue and worrying about this. Quarter and quarter, the sales and net profits are growing. So according to me, you can keep at holding for this particular stock.
So the next question is about gold. Should you invest in gold ETFs now given, or wait for it to drop? What do you think in 10 years time? Would gold rises as it used to rose up in past, like 12% CAGR in long term?
Okay, talking about the gold is currently in its all-time high range. Okay, and this is because that when the stock market is in decreasing phase, most of the investors get shifted towards the commodities. They start investing in the commodities, and we can see huge volumes there. So for the long term, gold is a very safe option. If you put some part of your money, like I told previously, you can put some part of your money in the bonds. You can also put some part of your money in the gold ETF for the long term. It will boost your returns, and you can again expect 16 to 17% CAGR growth in the future in the gold as well. Because gold is one of those assets which will be demanding, which will be valuable in the future as well. So you don't have to be worried about the gold. I think it's one of the best investment asset on earth.
Okay, that's great. So the next question. Do you use seasonal trends to enter? Like I entered into Voltas thinking it is summer, so it will rise. Now summer is peak, but Voltas is not. So can you give an idea about it so that it will be helpful for others as well?
Okay. One thing I would like to mention here. We know that some of the products and services get expensive at the seasonal phase. Okay. But Indian consumers are very smart in this. They will tend to buy air condition in the winter because it gets cheaper at that time, and they will use it in summer. Okay, because they know that they will be needing an air conditioner in the future, and they will buy it at the discount phase within January and February. So seasonal, you can enter in a particular stock in a season. For example, in the tourism part, most of the hotel industry will be get it boosted. The hotels which are situated near the location of sea, okay, like Goa and most of the hotels which are located near the sea, those hotel stocks will boost. So you can see that no one can enjoy summer and winter. No one can enjoy the weather. If I talk about the direct connection of summer, it is possible that you can enter. But if I talk about the air condition, Indian investors are very smart. They buy their air conditions or refrigerator at the time of winters only, because they know at the time of summer they will get those products at a expensive rate. So I think the ideology which you have used is correct, but you have used it in a wrong product and service. Okay. And going on to the vacation is a part of service sector. And if I talk about the air conditioner, it is part of the product sector. So product can be buyed at any particular time before the usage as well. But service can be buyed on a particular time when it is needed. So you can look, you have to brainstorm yourself in these parts, because I think this opinion wouldn't have been come in many of the people's mind. Okay. But if logically you can see that people will get service at the time they want it. But the product they can buy at any point of time and use it when they get it needed. Okay, I think this thing is clear.
That's absolutely correct. Yeah. So, next question from Himanshu: are stock options better or index options?
Okay, both are one of the most riskiest asset. Okay, we don't know about the index. Okay, index uh, can be headed on any of the time, because index are mostly driven by the volumes in the short term. Okay, but if you think that stocks are good in a bullish phase. Okay, stocks in the bullish. If stocks enter in a bullish phase, it keeps on getting more bullish. It doesn't care about the index then when stocks gets bullish. Okay, so I think stock options are much more better than index option. Okay, but the most of the problem and difficulty in the stock option is that you need huge amount of capital to put in the stock option, because there is no fixed quantity of a particular stock. And stock options also need market volatility. Whether you are investing in the options, intraday or BTST, you have to be focusing on the volatility. If there is volatility, stock options are quite better than index options.
So, let's move on to the next question from Ayati. She's asking that companies like Bell and Exxon, which are into electronic space, seems to be holding so far, but owning to tariff war and China, thereby dumping in the rest of world markets, will they face risk of losing market outside India?
No, not at all. Because I think 5 to 6 months earlier, also, Prime Minister Narendra Modi have also announced that they are focusing on the semiconductor manufacturing as well. Okay, and they are, and in India is much more advantageous, because in the part of technology, most of the people don't rely on China, because China's techs are much more corrupted. Secondly, China also steals information from most of the companies, and there is a risk of security if you are taking tech from China. There is a huge thing. I think China has also worked one of the country in the if I talk about the technology, and China is a very kind of spooky country where they use lot of data and they steal lot of data and information from other countries for their own usage. So most of the countries don't want to deal with China in the case of technology. And Dixon and Bale both are tech companies. Okay, electronic technology companies, and Dixon are one of the most crucial semiconductor manufacturers as well. So I think putting your money in the semiconductor industry is far good. There are more other stocks as well, like Tata Elxsi, and some of the stocks I don't remember the exact name, but Dixon, Tata Elxsi, these are the two major stocks in this particular space. You can go for it.
Okay, all right. So, talking about the next question: how to explore and exploit DCF discount cash flow for a company to choose and evaluate a stock. What DCF are good at?
Okay. Okay. Have you heard that what are DCF particularly? Let me explain what is DCF to each and everyone. DCF means discounting cash flow. Okay. The concept of DCF is very straightforward. Uh, what you can look towards it, any of the companies who are expecting good cash flow in future. Okay. They don't expect cash flow in present, they are expecting good cash flow in future. They are expecting that in the next year or next 2 years, they will be able to receive good cash flow in a continuous basis. So what they do is they do valuation basis on the basis of those cash flow or those earning in the present time. Okay. For example, currently, if I'm taking my example, okay, I'm valuing myself, okay, and I'm looking that I will be earning around 1 crore from the next year, and it will be keep on growing. And I'm valuing myself depending on that earning which will come in future. Okay, I think you have got the picture about the DCF. That's the whole thing what DCF is all about. Now I'm talking about the valuation. Uh, if you talk about the industries, okay, if you're comparing stocks within the industries, you can go for comparable company valuation. That is, you have to filter some of the companies whose market size is in a same range, not because market size is never same for any of the companies. For example, you are comparing those companies in a cement sector which are which are in the range of 15,000 to 20,000 crores. Okay, the market cap is 50,000 to 20,000 crore range. You can list down those stocks. You can compare the data and value them accordingly, because anything is valuable when you have it alone. Okay. For example, DCF value only works where there is a good valuation on a one particular stock. For example, if I talk about HDFC Bank, if HDFC Bank is currently looking for a good cash flow in future, it can be also possible Axis Bank and ICICI Bank are also looking. So it means that there are 3 to 4 stocks. So how you can say that HDFC Bank is more valuable than ICICI? Because all the three are getting the cash flows in the future. Okay, you have to find a moat. What is a moat? Let me type it. Let me type it 1 minute. You have to find a moat. What is a moat? Moat means competitive advantage. Competitive advantage which will help the companies to be ahead from other competitors. Okay, find the moat, and that's the right start for you. Okay, that's the highly valued stock. And this is my perception of valuation.
Okay, that's great. So next question about mutual funds. So how do you pick mutual fund? Looking at fund manager or returns or exit ratio or alpha beta ratio or AUM? Like Motilal Oswal was a high performing fund, but due to falling market, it fell. Now with rise, other funds like Parak Parik uh, are rising, but so much of a rise from Motilal Oswal. So do you have a, can you give a word about it?
Okay, so most of the people who are investing in the mutual fund, they invest in the form of SIPs. That's the huge mistake. Okay. If you are looking towards the mutual fund, you should put either lump sum money or you should directly invest in a particular stock, because the ideology of mutual fund is very straightforward. What they do, they take money from the bunch of people and they invest in the stock market. That's it. If you have the right knowledge, if you have the right guidance, you can boost your return much more than mutual fund, because these fund houses will take much of your profits. Okay, they will take much of your profits and they will give some parts to you. Okay, they are boosting their returns. Okay, another thing, most of the fund houses are driven with manipulation as well. If I talk about the reality, they are driven by the manipulation as well. So this is the second most disadvantage which a mutual fund has. So I would never recommend someone for a mutual fund. Okay, I think you should build your own portfolio. Okay, and in future, I'm also planning a small webinar. Okay, we have talks with the team of Signalz. What we are doing is we are giving a full-fledged guidance with that road. I will be giving a full-fledged roadmap to select the stock, and it will be happening very soon. Okay, planning for the next month only. So where I will be telling you about that rather than investing in the mutual fund, I will be giving you a roadmap to invest yourself, selecting a stock and invest yourself. That's the basic.
Okay, thank you, Jeet. This is Sharath here. I just taken over from Prabal to continue the sessions further, and thank you for that insight. Definitely quite a good input for people to really follow. And we're also getting some good comments on the Q&A panel saying that loving the insights and really very in depth, and it's a good compliment for the kind of answers that you've been giving. Moving on to other question, we have another question again on the gold. Probably would have covered it, but for the benefit of those who join later, Any comment about gold? Will it be subjected to mean reversion? Is it not safe to invest in gold at the moment? Should we wait for a fall?
Okay. Uh, Gold is an asset. You never know at what price it will go. Never trade gold for the short term. That's the only thing I would like to say. If you are looking to invest in the gold, you can go for the long term. Okay, because you don't know when the gold will rise. You don't know when the gold will fall. Yeah, it's you can predict other natural resources like silver, crude oil, natural gas, but gold is one of the most important asset which many of the investors try to buy it in the discount, but they can't. Okay, so at whatever price they are getting, they are investing in gold. The simple ideology behind this is that the demand of gold is very much high, but the supply is very less. That's the reason is gold is the one of the most valued asset, because if I talk about the intrinsic value, it is much more value than diamond as well. So you can invest in gold at any point of time. It's you don't have to wait for a fall, because if you are looking for a fall, you can look for a very short retracement. Okay, so I think uh, investing is the gold is an all-time and full-time opportunity, and at any point of time you can go for it.
I think a lot of people will be quite happy to hear that because, yeah, gold is not going to lose its glitter anytime soon. So
Yeah,
it's good
that's
to hear.
great.
Yeah. So the next is on another one, HDFC Bank. So any suggestion on HDFC Bank, one of the strongest banks yet in the last 3-4 years? If you see the raise is not much compared to other banks like ICICI, Axis, or IDFC First Bank.
If I talk about the HDFC Bank, HDFC Bank is the strongest bank, but a simple thing I would like to share, a simple strategy or a simple thought, you can say. Uh, if a room is filled with everything, is there much more space to put anything else in that particular room? It has already been packed up. There is no space, there is no mass, you cannot put anything in that particular. If I talk about the stocks, there is a business cycle. Okay, if you have heard about the business cycle, every business goes towards this cycle. First they start a business. Okay, it's just a small business, it has just started, where you can expect less profits, less sales, and time by time it creates its brand value, it creates it growth, and it goes in a growing phase. In a growing phase you can expect some profits. Okay, and you can expect their increase in sales in a great volumes. HDFC Bank have cleared all these stages and is in a matured phase. Okay, it is in its peak. The business is in peak. Okay, so the stock which has already introduced much more line of business, the sales are constant. Okay, it is in a particular range. There is nothing to get increased. Okay, whenever a particular stock sales increase, it is about a one single reason. There is about one single reason, that a particular industry or particular business has much more growth potential in the future. Do you think HDFC Bank has much more potential in growth? Because it has already been growing. Okay. You will not water a particular tree. You will water a plant to make it a tree, but you will not water a particular tree to grow more, because it is not possible to grow a tree. Okay, because it has already been grown. So I think you should focus on those banks whose growth is coming in the future. There is a lot of growth left. If HDFC Bank will give a good growth in only one case, that is if he announces that they are expanding its business outside India and they are going global. It means that they can cater most of the consumers and they are expanding their business on many other locations as well. That's the reason. But as of now, you cannot expect anything from HDFC Bank rather than continuing the same line of business and going with the same sales. So stock will be consolidating in a particular range. It will give very slow growth. It will grow. The stock will grow. You will be earning profit on the particular stock in the long term, but the growth will very slow. The stock returns will be less as compared to the investment in other banks. That's the simple reason.
Yeah, this is one of those long-term investment instruments, right? Yeah.
Yes.
Okay, the next one is on Voltas. So, is it a good time to hold Voltas as a stock? It's usually peak for just the summer. So, should I sell it at a loss in a few months' time or hold for long term?
Okay, if I talk about the technicals in Voltas, there's a problem here. So Voltas has fallen. Yeah, I think let me see, is there any news? Okay, certification norms, waste pricing policy. Okay, government have announced a waste pricing policy, and that's the reason most of the stocks which are in the electronic goods, they are making direct goods. The stocks has been filled today. Okay, if I talk about the price, if you're already holding that particular stock, you can see a reversal from this 1135 levels. Okay, because I think according to me, if you look towards next 2 or 3 days, it can fall more because it has started at bearish phase. The chart as well. You can see towards this chart took a support from this 200 EMA, hourly EMA, and it fell down. It is in that phase only. So yeah, if you're holding it for the long term perspective, then it's good. You can hold it. You don't have to enter in the exit in the losses for next 4 to 5 years. You can keep on in the holding phase. Okay, that's the particular view. But according to me, in the short term, if you want to square off, you can square off. Okay, and one more thing, you can also average it if it comes down for the long term. You can buy more quantities. Okay, and the the strategy for buying is that you need a good reversal from this. Okay, if this level breaks 1134, I hope it will not break. But if it breaks, don't buy it. If it touches this level and gives a reversal upside, you can average it. Reversal in this particular place, this part around 1180s. But reversal is needed from downside. V reversal, this type of reversal, if I particularly talk about this reversal. It went down and it reversed upward. Okay, so that's the next question.
Yeah, next one is from Mr. Nitish Rathod. I just want to give a shout out to Mr. Nitish Rathod. He has been one of the active participants asking quite a good number of good questions. Thank you, Nitish, for the questions. The current one is he wants to know more about the long-term views on some of the and the upside potential of some of the stocks. He has listed some 6, 7 stocks. The first one is IREDA, and then next one is IRFC.
Okay, if I talk about the IREDA, for the long-term perspective, IREDA is one of the most important stocks because in the power sector, renewable energy is the future. Okay, because this is one of the most important value chain which I have personally analyzed. Okay, renewable energies, and India is aggressively investing in the renewable energy. It is also expanding its capacity. So IREDA is a good stock for the long-term perspective. Rather than you can, if you can also look towards the management analysis as well. But if I talk about the price and talk about the fundamentals of that particular stock, IREDA is very good because you can see that it has recovered a very it hasn't fallen much as well as compared to other stocks. Okay, but the in the current view, you can see that it has also took a support from downside 137. It has boosted a good return. If someone had buy in this lower levels, he would have been getting itself in a very good profit as well.
Yeah. Next one is IRFC.
Okay, the next one is IRFC. Okay, it leases. Okay, what IRFC does, if I talk about the business, IRFC give leasing towards some of the railway transports, and India is also aggressively investing on all the connectivities, the railway connectivities, trains, and most of the trains have also been introduced. If I talk about Vande Bharat as well, one of the most important train which have been introduced, but it saves lots of time. And now currently India is moving towards a project of bullet trains. Okay, so for the long term perspective, if you are trying to invest, if you want to invest for 6 to 7 years, you can go for IRFC. If you want to invest for more shorter period, 3 to 5 years, IRFC is very good, and it is currently you are getting it a very less price, around more than 50% discount as well. So you can go towards it. Technicals are good. One thing you can be sure of, if you want to be more safe, what you can do is you can buy it around 140. You can buy it after 140 crosses because this is a huge resistance. It is also a 200 EMA resistance. If what it breaks, if the breakout does around above the 140, you can go 40 buying towards it. You can move forward towards 170 as well.
Next one is Motherson Sumi.
Okay. Auto parts. Okay. So I think this company comes under automobile ancillaries. Okay. Let me see about in the screener about the main line of business. Just a minute. Okay. Its revenue comes from passenger vehicles, 58%, commercial vehicles, 12%, two-wheelers, 14%, and it gives wiring solutions to them, electric wires as well. Okay, you can go for the stocks as well. If I was just looking towards the right segment. So the segment which it focuses on and gives its services or products is EVs. Okay, passenger vehicles, EVs, and electric wires as well. So as we know that EV is the future, and for the long term, you can go for this particular stock. Again, if I talk about the support, you can enter above 58. Okay, and you have to be, if you want to be more safe, you can buy above 60. It will be a good investment above 60. You can wait for 60, but for the long term, it is quite good. It's a quite good investment. You can go for it.
Okay. Next one is Azad Engineering.
Okay. Azad Engineering has already given a resistance breakout, but currently it is in a manipulation zone. If you look towards this. Okay, this is an indicator which I personally use. It's a premium indicator for the support and resistance. This, if you look towards this yellow zone is made when breakouts can fail, where there are chances where breakouts can fail, and it is known as manipulation zone, where people think that breakout has been done and it will go up, and it goes towards the breakout and then it fell. So you can wait for this manipulation zone to be over. You can enter in this particular stock above 1600, and this stock is quite fundamentally good as well, because I'm personally looking forward of this stock to give my personal research as well. You can go towards it. Okay, you can go towards it above the level of 1600. It will be a good level to.
Okay. Next one, Paras Defense.
Yeah, I think it has already given a good trend line breakout. It has already given a good breakout here. It has pushed it upwards. Okay, this is a defense sector. You don't have to worry about this particular sector as well, because India is strong arming its defense sector for quite 2 to 3 years. So you can enter this stock because breakout has already been done, and it is also a good price to buy because it has already been corrected from its high of around 1600 levels. I think you are getting this stock in discount. You can buy. The first target, I think, should be around 1170. Okay, next 100 points target. So you can, if this level breaks up, you can buy more for reaching the high again.
Sure. Yeah, I think taking up some other question now. What is your go-to chart indicator or chart setup that you use? What are the specific EMA levels that you have on your chart currently?
Okay, so I look towards the 20 EMA, 50 EMA, 200 EMA. Because 20 EMA gives you the average of last 20 trading day. Last 20 trading day means you are looking towards the average of last 1 month's price. And if I talk about the 50 EMA, it gives you around more than 2 months. Okay. And if I talk about 200 EMA gives you the last year's price, because there are around 210 trading days in a particular year. The rest are all holidays. These three EMAs you can focus on: 20, 50, and 200. And if you are looking towards the short term, you should only look towards the chart, which the daily charts only for the short term. And you can look towards the RSI. RSI is the second most indicator which I use, because if I talk about this Paras defense only, you can look that RSI is also bullish. It's around 63. Okay, but there is a huge problem that we cannot focus on each and every stock. So I've particularly built a particular screener for myself, where it's a premium screener, where I put on all my strategies there, and it scans the particular stock, lists down the stock on a daily basis. So I don't have to look on much of the stocks on a regular basis, on a manual basis. Second thing, the last indicator which I use the most is the support resistance. This is a premium indicator which is only available in TradingView Premium. Okay, so I use these 3 to 4 resources. Some are free, some are paid.
Jeet, in general, are there any kind of topics that you want to kind of share with our audience, which, according to you, some of the crucial things as a trader or an investor that they should keep in mind, or rather, you keep that as your primary, agenda or primary goal post that you keep as a reference? That's a very generic question, general term, but this is the time you can probably share your thought process around the stock market strategy, trading strategy, or investment strategy.
So first of all, most of the people who are present here, I think they are most of the traders also, and they also invest in the part-time basis. So what you can do is that if you are going for the trading, you should have some of the resources. Okay, some of the resources which are available, which will cost you as well, which I also personally use, and if you have premium resources, it will help you to boost the returns. Because the simple thing is that when you want to boost your return, you should have the proper data in front of yourself. And most of the people are only dependent on the trading view charts and the free version as well. Because and it's not their fault, they are not aware about some of these resources which have to be used. And because I personally, when I give trades or when I take trade, uh, personally, it for investing in the resources, it take me around 7 to 8 thousand per month by taking about premium plans for screeners, for technical analysis, for some of the open OI data as well, the accurate OI data, because the OI data which we watch in Nifty in NSC, it is delayed with 1 minute. Okay, that 1 minute delay also can cost me around thousands of money, or to the traders and investors whom I'm giving the research. That's the main problem. So if you are looking towards it, you can go for the resources, and you can also move towards our subscription plans as well. You don't have to go for all the premium resources. You will get our expert guidance as well, and those resources which are used by us technically, we use those resources only to give you the research. That's the second thing.
Yeah. Yeah, I think that's a pretty important point that you brought up. This kind of gives an idea to the audience what kind of a work that goes behind all this. Of course, you're all well qualified. You are SEBI certified because you want to get certified. SEBI certification, you have gone through a lot of scrutiny, a lot of exams, a lot of audits and stuff. Which means whatever you're doing, that's a kind of a groundwork that you do. The amount of groundwork that you need to do in terms of doing the research, understanding about the company, understanding its fundamentals, understand the technical part of it. All that takes a lot of expertise, a lot of time. All the effort goes in there. So
And one more thing, sir.
yeah.
The most important thing for fundamental analysis, which many of the traders and the investors misses, is that is brainstorming. Okay, brainstorming is a skill uh, which each and everyone has, but we don't have the idea where to use it. And the most, if I talk about the stock market, brainstorming always comes with experiences. Okay, how many times you have seen the market, how you are dedicated, even you are not trading, you are looking towards the market on the regular basis. You have went up with all the highs and lows in the market for last years or last few years, and this builds up with time to time when you regularly look towards the market and focus on some sort of stocks. For example, I've seen most of my friends also who are in the trading firm, they only focus on 10 to 20 stocks. They only take trade on those 10 to 20 stocks only. They don't see on other stocks only. They only take because they are thinking that rather than practicing thousand of shots, let's prepare on one shot 1,000 times. That's the most important thing. So if you are getting just 2 to 3 stocks which you know the best, that's the best thing which a trader can have. You can make money with that 2 to 3 stocks also. Okay, and that's our focus only, because we don't give trades on many of these stocks in the trading perspective or in stock options. We only focus on those stocks which are quite volatile, and we have observed a lot as well.
Yeah, I think that's a kind of value that you get by getting associated with the SEBI registered analyst. They do all the hard work of doing all the background and then provide you kind of ready-made recommendations for you. That's what they offer on the Signalz platform as well, through various types of subscriptions based on what you're looking for, whether you are a trader or investor, whether you are on the equity side, you are on the F&O side. Based on your requirement, they actually have various plans for you, which you can just subscribe to and just wait for the recommendations to come. When the recommendations are delivered very, very seamlessly to you through your WhatsApp, through the Signalz app, and it's a very straightforward recommendations with an entry level, an exit level, and an exit price, and what the upside potential. Every final details have been given, and all the hard work of studying and stock and giving recommendations, everything is taken care by them. With all respect for all the effort and the qualifications and the SEBI certification, I think we can just make use of those subscriptions from them. Of course, we'll be talking about the subscription is going to give. Just before that, there are a couple of more questions, Jeet, if you're okay.
Yeah, 100%.
Yeah. So there's one other thing. The one question from Sarvesh, TA doesn't work in gold.
Technical, yeah, as I told before, you should not trade on commodities because first of all, it requires huge amount of time. Okay. Secondly, there is no much data about a particular asset because in gold, there is no fundamentals of gold. Okay. There are no fundamentals of gold. You have to look towards the technicals and you have to be dependent on the technicals. And if I talk about the volumes in a particular uh, commodities market, there are a huge number of volumes and all the big players are sitting there. So in trading perspective, there is huge amount of manipulation in the technicals as well. So if you are looking towards the long-term perspective for the gold, that will be a better opinion for you. And as I said, you should not look towards the price of gold. Gold is the only asset you can buy at any point of time, and you can keep till any point of time. It will give you a huge amount of returns. One of the safest asset on the planet.
Yeah, one other question. Can we use VIX to understand the movement of stocks, or it is primarily an instrument of option trading?
In VIX means how many amount of traders are present in a particular day, because volatility comes from the number of buyers and sellers in the market. Okay, they only move a particular asset in the form of volumes. So yeah, VIX is a very good option if you can look towards it. Secondly, if you can move towards the open interest data, the real open interest data, which you have to take about the premium subscription for OI as well, because the free versions can give you delayed data. So that will be an issue for you. So VIX is a good setup, but yes, only trade when there is a volatility. Trading means volatility. Okay. Unless you are an option seller, you will be needing volatility in the market, or else you can't make money without the volatility. And one more thing I would like to add from our side as well in the Fox's financials, we don't give trade on the regular basis. Simple as that. Why? Because over trading is one of the biggest problems each and every traders have. If Sarar sir also agrees this thing, because most of the traders overtrade in the market. If they are earning profit for one trade in a particular day, they want to take more, and at the end they exit in the losses on a particular day. And I have also personally experienced this problem with myself on the initial stages. Okay, sometimes if the volatility is present in the market, you can take 10, 20, 50 or 100 trades as well, not an issue. But if there is no volatility, you cannot take a single trade. Okay. So you will get an opportunity on a single day as well, that you can trade as many trades you want in a particular day. There is huge number of volatility. You can take number of trades. But when there is no volatility, why you are wasting your money or time on a particular trade? Because at the end, when there is no volatility, the option premium will decay and you will suffer losses. And there is 100% chance of suffering losses. You are buying option in a non-volatile market. So it's a particular strategy which we also implement, that we have to minimize the risk and losses for our traders and investors. We don't have to give trades in a particular market where there is no volatility. Okay, we will be sharing insights. We will be giving short-term trades, not an issue. Okay, it will be also there. But intraday portion will be on the volatile markets. That's our main focus and our main USP, if you can say of it.
Yeah. So for all the audience, I have pasted a link that takes you to Jeet's profile on Signals. You can know more about him. You can learn more about his background. You can also see all the subscriptions that he's going to offer. Of course, you're going to talk more about a subscription. And just one other point that please wait for some time till we complete all the questions, because you're going to get a really good offer as part of participation. So you're definitely going to get a good offer here, which you are going to come into very shortly. Before that, we'll just finish a couple of more questions that are in the list. Jeet, next one is from Megha. It says, what is this Luxago support resistance on your chart?
Lux Algo support resistance, which is given, it is a indicator. Okay, it is also available in the free version, but this which I am using, it is only available in the premium version. The levels in the free version are not quite accurate, which I have also personally experienced here. So I have done with the free version on the premium version only. But if you are having a premium version, you can definitely for Lux
Sorry, Jeet, I don't know whether you wanted to show the chart here,
Okay,
but
I'm not telling the 100% accurate. It is the
I think, Jeet, I don't know whether you want to show the chart. I'm
okay,
seeing
but
the thumbnail actually.
yeah. 1 minute. Let me share you the rating. Is it visible now?
Not yet coming up. No,
Now it's visible.
yes, it is visible. Yeah.
Yeah. So you can see that this is thing. I'm not telling that it is 100% accurate, but the main plus point in the premium version is that it also gives you the manipulation zone. Manipulation zone means when breakout fails. Okay. When breakout has chances to fail, so that you cannot for the false break. So this helps me a lot. I think support resistance is one of the finest indicator which one can have. And one more thing, support resistance doesn't have any level. Support resistance is always in a range, because if you can understand the logic, number of volumes cannot be at a one particular price point. Because when people start buying, they buy in a particular range. For example, 1,000 rupees to 1,050 rupees. This is a 50 rupees range where each and every investor or trader enters. So it is a range. It is level a level.
Okay. When you are on the chart, I think we have two more ask on the two more stocks, Vodafone Idea and Swiggy. If you could give your comments whether it's a long-term worth investment on these two, Vodafone Idea and Swiggy.
If I talk about Vodafone, there was an announcement uh, some days before that government is giving out Vodafone for all the debts and issues which has been facing. But I don't think Vodafone would be able to sustain in a long. If you are looking for a telecom sector, you can go for Airtel, I think, which is only the listed telecom company. Okay, and you can go for Airtel, but Vodafone Idea is not good for long term. You can, if you want to try it off, you can have it few stocks in your portfolio to just try and test it out if some things happen. But according to me, which are the scenario which I am seeing of as of now, it will be in a particular small sort of range. And what was the next stock, sir? I think
Swiggy, yeah.
one of the everyday product which each and everyone uses. Okay, for the long-term perspective, Swiggy is quite good. You can go for it. And if I talk about the fundamentals, there is no much fundamentals available because only two earning reports have come over here. Now, if I look towards the screener, let me look towards the last two quarter reports which they have presented. We see what it shows. Okay, the sales is constantly, but net profits are negative. Means there is a net loss present, and I cannot see any recovery in the net losses. So you can go for this particular stock when they are able to decrease its losses. If they have started decreasing its losses, you can go for it because one day, if it takes a proper growth in losses, proper growth in profits, it will definitely come into the profits in the future. Like till then, if you want to invest in, you can go for Zomato because it is currently in the profit. But if I look towards the series data, the constant quarter on quarter, it is suffering losses and it keeps on increasing. So you can wait till the fundamentals get correct.
Good. Just on a lighter note, I'm not a analyst on a fundamental analysis, but keep ordering more on Swiggy and Zomato.
Yeah, me too as well.
Okay. Probably maybe for the last question, what are the top 3 buys for the short term currently? Something we can put a decent amount in the current market?
You can go for CDSL. I've already given a view on CDSL before. I will be showing you what are the past views and performance and the which we have given. Okay, I will be showing it the next screen. You can go for Power Grid. Power Grid, my target for Power Grid is 450 for the long term. Okay, and it is around 325. So Power Grid, CDSL, and the third one is Geo Financial. Geo Financial is one of the stocks which you are getting it in a discount, because with what I see that Geo Financial can also go to 1,000 rupees in the next 4 to 5 years. It has a potential. And the second most thing is that BlackRock is also the asset management company for Geo Financial. And if I talk about the BlackRock is a company which is the world's biggest asset management company. It is not India's biggest, it's world's biggest, one of the biggest. Another two is Vanguard, and so where BlackRock comes, you don't have to think and figure out. And second thing that it is Geo is a company of one of the most valuable businessmen in India. So you can go for Geo Financial as well in the long terms.
We just got one more question. Probably we'll make that as the last one. Can you please explain pair trading? Is it promising?
I don't think so. Okay, because the concept of pair trading has come from forex market. Okay, so I don't think you should go for pair trading. And according to me, you can, if you want to trade, you should only focus on swing trading for the short term. I think most of the people who are not much accurate in intraday, you should not move on intraday as well. So I think pair trading concept is from the forex market, and the concept is really quite not accurate as well. So you can go for swing trading.
Yeah, good. Jeet, I think it's really good to see this kind of questions and the way you answered. We actually covered a whole gamut of topics, and most of things you actually supported with the live data and your analysis. I think we are getting very good feedback from multiple people here. In fact, the next topic, what you're going to talk about is the special subscription that Jeet is going to offer for all those who have participated. But Jeet, you know what? People are already impressed with your analysis. There is already a couple of people bought your subscription while the discussion is going on. You haven't even spoken about your subscription, but even then people have bought it. So probably is the time you should really talk about the subscription. What is that you're going to offer, and what is the special pricing that you're going to give, and special set of recommendations that to be part of this subscription. Go ahead and you can explain about that.
Okay, I will just take 5 minutes for explaining this. It will not take much time. So just let me share you my another screen. I have prepared something for you. It's not all about subscription, but it is something about my analysis and about the brand value which we hold. Okay, so this was the session which we have conducted. And if I talk about personally myself, as I have also being introduced by Sarat sir and Siddharth sir. So I have completed my MBA last year only, and I was present in the market from the last 5 years because I was very curious about making money. Okay, because I have also banged all the doors for boosting my income, whether it be cryptocurrency or stock market or anything. And secondly, one more a short story is that I also used trade when I was attending my MBA classes, and many of the times I missed my classes to trade in the live market because at 9:15 market opens, and at I think 9:30 my classes started. So I missed some of my classes to trade in the market. It was a very excitement level for me as well. So as you know about me, our all the post which we post on the social platform gets covered in CNBC TV 18 also, in StockTwit platform also. As you can see, this is a snapshot of CNBC TV 18 markets, and it gradually posted. It is being posted on the daily basis. So we have also have tied with them, and due to our brand value as well. If I talk about some of the last Ask Me Anything session, our one of the most important analysis was on the web solar, which I have recommended Nitin, one of our subscribers, that what are my views on web solar, and I've told that fundamentals have been improved. You can buy about at 9:15, and you can see the date. The date is for March 12th, 2025, this year only. Last month only. And I've given at buy at 9:15, and currently the stock price is 1531, more than 60 to 65% returns. Okay, in this particular stock. If I talk about Geo Financial, I've given a recommendation at 227, and currently its high is 258. And Sachin has asked me about CESC. CESC, I have given a recommendation at 145 for the medium term, and it has gone towards 163 levels, and currently it is trading at 160. If I talk about the Anand Rathi, okay, Anand Rathi, I have given a very short term buy, and in a single day, it covered all its target. Okay, less than a day. So I have given it at 1715, and the target which I have given for short term was 1790, and it has been achieved in the next trading day. Another stock which I have given, Polycab. Polycab I have given when Adani news came out, and all these buyer stocks have been fell, and I've looked that as an opportunity for giving a buy call to our investors, and I have told them to buy at 5,000 with the levels for the next target of 5,200, 5,600, and 5,300, and 5,600. 5,300 have been achieved. After that, it has triggered the stop losses due to the crash which happened, 1,100 points crash in the last week, and after that, it all again rallied towards the last target. Then, if I talk about the another, it is TBO Tech. Okay, TBO Tech, one of the IT companies, and this also we have achieved our target in a single day from 1290 to 1390, which I have given in the short term. The next one is CDSL, which I have given in the long term. CDSL I have given at 1,116 rupees, and currently it is 1,360. I think nearly around a good return if you calculate it anyways. And the next one is Power Grid, one of the most important stock which I have also recommended now, and I've given at 280 levels, and currently it is at 315 levels with a high of 332, and I have given the long-term target for 450 around next 1 or 2 years.
And first of all, thank you so much, Jeet, for all your time and taking all your time and patience for answering all these questions so diligently. And another big thanks to all the audience for joining in and asking such interesting questions. We really look forward to a long-term association with all our users. And Signalz is here to really bring that kind of a transparency, that kind of openness with respect to stock market advisory, and that is one of its kind, which is actually a revolutionary one. And we are really happy to have so many audiences joining us and joining our platform and in this journey. As Siddharth initially mentioned, this is going to be a investment journey, and we're all going to be together in this journey. And thanks for being part of this ecosystem, and we look forward to your participation in the the webinars that we are going to host in future. Thank you so much. Thank you, Jeet. Thanks everyone, and good night.